What's up, y'all? Good morning. Hold on. Let me get everything going here. So I'm running a little late. We good? Chat, we good? Bulls on bottom, tap, hedge pressure, rod on the horizon. I'm in on the long just now. A little bit of a little technical difficulties there. Good? We good? We good? What's up, friends? What's up? What's up? Oh, geez. Market's looking, it's like it's trying to sell off here. We have bulls on bottom, hedge pressure tapping each other. Resilience is negative, trying to fill the gap to the downside. I took a normal size position here. It's trying to move. Well, if we get that bulls on bottom hold, we've got that DD ratio being strong enough. D7. I'm gonna bet that we hold. Oh, wait. That's right. TV consumer confidence numbers come out in 9 minutes. That's true. I'm just gonna air to the bull side. Sorry about that. This morning my router was being weird. Like, had to reset it. Get it going. Hey, we like first show up to the stream, right? Just when I first get here. And the internet's just like not connecting. Literally the moment I sit down, it's like I'm trying to get onto my modem. My router starts like flashing. It reset a couple times. And it was like, okay, good. I'm all trying to get on a trade. I'm all trying to. So I'm like, ooh, bulls on bottom. Like, ooh, we got data coming out. Ooh. Right, chat. I might have overslept. That can be the case. Ooh. At times, but usually I'm up like early bird, same time every day. We double check how everything set up right here. Do dynamic. And I'm in the long before the event, but I'm gonna trust and I'm okay. Okay, SPY. 69. Sorry, 69.59. Okay. 69.59. 54. Okay, that's good. That's good. Yeah, good SPY here. Okay, we know how I feel about this. Interesting to have a slight overshoot on bull zone. We know how this works, right? BLU is open, blue open. This is the setup here. Now again, CB consumer confidence numbers come out in 8 minutes. So today could be one of those event days. It's interesting to see us lose bull zone though. That's not expected. So open, blue open is one of the trades. With resilience less than 0 though, it does want to fill the gap. So that's the problem. Res less than 0 wants to fill the gap. Worst case scenario, we are down here. And then we have the liquidity pocket trade back up to test here on the D greater than half. This is the play. And then anything below here, this is just bad. This is unexpected, rare, like the rarest, rare that we break. Somebody in Zoom chat said I need a little bed beside the desk. LOL. It is funny. All right, so what we want to see is resilience. We want to see resilience recover. The one problem today is the stocks. The stocks right now are trying to be negative. So resilience can predict a hedge pressure break, which is interesting. Resilience can also, if you look at our priorities, can also at times break the liquidity map pieces like the bulls and bottoms and stuff. Let me show you the priorities really quick. Where's my Discord? Project. Where's my? Here on the summary side, resilience is a higher priority than liquidity map stuff. Hedge pressure, dynamic hedge pressure, everything. ED bull zone support or bear resistance is at the top. That's usually more powerful than resilience. So the interesting thing is like resilience can be very, very good at predicting a hedge pressure break. Like negative resilience means the gap wants to fill and will smash through hedge pressure. But usually bull zone bottom will hold despite resilience. As a matter of fact, like the bet that I take is that it should hold, and the fact that it's not holding is kind of the alarming part. But we're going into an event, so the market can just be trading down. The bands come in automatically. Yeah, they do. You're rolling to the Z contract now, which is our table. It wasn't allowing you to change contracts, but it will now. So the interesting thing is that DD ratio greater than half and bull zone bottom is the priority. Number one problem is DD ratio. But the good thing is DD greater than half. You have BZB and hedge pressure at the same time. I'm going to trust the process. Support. But the issue is too, though, you have resilience is less than 0. So stocks themselves are trying to sell off of today's high. Resilience less than 0. So the two pressures that are fighting each other is resilience wants to do this. Okay. Yeah, it's wanting to do that. Resilience doesn't crash the market. It just wants to fill the gap. So resilience is pushing this way. You have DD pushing this way from here to there. You also have the market actually wanting to be here by its own design. This is like the market wants. It wants this. So from here to here and here to here is a very tight range. So if you're longing the market, it's from here. There really is no short setup. If you want the safer long, like I want to do, is I'm going to long from bull zone from that point higher. I am in a moderate size position. Let me go ahead and turn that out. I'm not too... I didn't realize I was in 3. So what normally is to be expected if we do drop is here to there is at least, this is at least a trade from here to here to test. Nasdaq kind of has the same setup. This is looking decent. VIX is still in a bearish liquidity map. VIX at hedge pressure right now. So 2 competing pressures. Numbers come out like in 1 minute. We're going to expect the market to just move pretty quick. Those numbers look like here. There's the rare one. Okay. That pushed the spare zone. Let me... Let me say no to this one. Okay, yeah, no to that. Is my investing up? No, calendar, come on. What up? Give me 1 second. For some reason, my investing market calendar is not popping up. CB consumer confidence data. Come on. My internet being silly again. I'm trying to open the website with the data. Oh, here we go. Thank you, Justin. Super confidence, 98 on a 103 forecast. Oh wow. Okay. So the rare thing would be to punch 2 bear zone and keep going. So you have 2 pressures here. We have the event coming through. This could be a pretty sizable thing if the market continues to sell from here. So if we reclaim here, then the market's gonna hold for the day. If there's no support underneath this except for yeah, no to that. The rare thing's happening. Get out of the way. Don't deal. So it looks like on that news, we took a pretty sizable drop. I closed this out pretty soon, pretty quick. So in any particular case, you know, these are rare days in these kind of markets that we have. So go ahead and put up monthly map on this one. So the event dropped to spare zone and bull zone. Just let today be its thing. If we have one bad day in the middle of the mix, let today be its thing. Bull zone stronger, bear zone stronger. They're shorting on this one for me, so we're going to let this guy pull back. We went like this. If the market wants to be up here, but if it doesn't happen, then there's no reason for me to try to buy a dip or chase down here at the bear side. So DD's still going to want to recapture. Rez is pushing lower. Rez is still pushing lower. From here to here. So any reclaim, so from here, any reclaim of here is the entry point. I'm going to point right here. This, anything above here is a push to the middle. Other than that, this is like what we call no trade zone, like no trade zone, no trade zone. When you break from bull zone to bear zone, it's going to be wild. You don't know what's going to happen. The market can do one of a million things here, so don't. What's going on here? Let it do its thing today. Yep, UVXY has one place where the market can resist. Nice find. So let me show you two parts here. VXY has resistance from there. We'll navigate this one later. Good strong setups, we love them, right? But then you have an event sometimes to push the market the other way. It's okay, it happens. VIX still wants to be contained, so it's not like from here I'm super worried about the market. In a perfect world, the S&P. So right now we have to be careful. We're fighting resistance here. Let me clean some of this up a little bit. Rare case would be to close below the bear zone. So, good entry points from here. I'm going to take a long bear zone. Like the bull zone for the 10 points. We see resilience start to recover. The market's going to look pretty decent here. That's a pretty wicked overshoot of all of those zones here. Q. I usually trust the process. I don't usually think the market's going to spontaneously. That consumer confidence number is down, but I don't think that's anything. I think that's an opportunity here. I really think the bull market's just strong enough. I wouldn't be too overly worried about this. Now, here's the first resistance, right? Or too worried about the event, right? The news, consumer confidence came in pretty low. For some reason, investing's market calendar wasn't opening when I tried to open it. Hold on. Let me try one more time. The website is being funny. And 98.7 came in, you know, somewhat low. That's a pretty low number. Okay. So this is resistance number 1. Here. So this testing bear zone is resistance. I wouldn't be surprised if this tries to test from here. Resistance 1, R1. If this tests the support, right here, it's a long entry up. Let's see right here. This is the kind of, I'm going to estimate 69 here. Right about here is that first retrace support. Bull side, want this to hold. This is what I want. I want this to hold. I want this to hold. I want this to hold here. I want to break here. And I want to break right here. And I want this trade right there. Still in the danger zone for me to enter here. But if we start to get the confidence here, pushing up, this resilience number pops above, then we're clean. Okay. We're clean today. Problem is BRSU below hedge pressure finds monthly hedge, and that's way down here. So it's like I'm not gonna mess with that if it gets crazy. I still don't think the market has much of a mechanism to crash or sell off, so I'm still confident. We'll see. I'm still confident in the bull market. I am. hold spot. Okay, computer, stop being weird. I want this to hold right here. Remember, if this is that one really big, nasty one-day sell-off day, I got tomorrow the next day to pull out trades to recover. It's risky to take the long from here. I'm going to wait for the confirmation there to go. So normally, right, bull zone bottom under all circumstances, this is a very high probability of bouncing. And obviously we were losing that into the CV number. It looks like some people knew that information. Right. Resilience is trying to make a comeback. You know, I always bet on the bull market. I try to. I want this to hold right here, where my marker is, right here. We'll get ready to fire some trades on as soon as we get going there. What's up, friends on YouTube? Don't forget to hit that like button. Bear zone to bull zone. You nailed it. 100%. Nailed it. So I want this right here. Boom to boom. So right now, here's that first resistance. Like I said, R1 is playing out. Here's that retrace right there. This is where we want to see some support. VIX, one of the key important factors is what VIX is doing. Take note, UVXY 24 break would be massively bad for the market. So keep your eye out right here. Don't take this out of your vision at all. This is a really, 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 really strong push. A BRSD above hedge pressure. This right here is strong. This break is strong. So VIX does have resistance right here. So the market selling can stop anytime, as the VIX might have a hard time breaking this. So that is one of the saving graces of this market collapsing today, is that the volatility, while it is present, has the capability of shutting off very quickly. So, but it does have it can accelerate if we start to pick up past that 24 level. The volatility is like at that cusp, right, where you kind of don't want to mess with it until you get that confirmation. So here, no heroes right here, no heroes on this dip. Resilience is not getting any love today. So the stocks themselves are continuing to sell. Doesn't mean the market has to sell. But I want to see that resilience number fight and reclaim zero so that we get back over here. Right? Now the problem is, let's delete the once. No longer does it want that anymore. But if res greater than zero, it goes this way. As soon as res is greater than zero, the market wants to continue to go. So this is that market that I talked about. all the videos, is that selling is not going to crash the market. And there's going to be a lot of bear traps. There's going to be a lot of things. I feel like this is the market where every dip's an opportunity. But we know we're not going to trade it stupidly. But I feel like every dip is an opportunity. So let's wait for an opportunity, right? Where I say I want this to hold, this little level right here, I want that to hold. That's all I want. That's it. Step 1 is I want that to hold. Step 2 is I have a long position in mind. Typically, bull zone to bear zone breaks will try to test the bull zone before it sells. This one doesn't look like it wants to do that. Data isn't so great in front of my face right here. Our resilience number is deteriorating kind of fast. VIX is running up to hit that 24 test. The fact that it's not continuing to sell here is pretty decent, but the problem is when it comes to volatility, you can see some, it's not like it's going to slowly trade its way down. The VIX increasing the way that it is, the problem is that while the market has moved like this really fast and is now drying up because that volatility is there, any additional selling just comes out of the blue and it's fast again. So be very careful on this. This is why I don't like to be in a trade right here, because while it looks like it's stable, anything can happen. And VIX right now has VIX MHP. How to get gold futures, you're asking? Go to your table at the bottom and just look for GC. Sorry about that, Chris. I didn't even see your message. I'll show you all the tickers today. In the Zoom call, I'll walk you through how to get all the futures tickers. But basically, you go to the risk interval DD table at the bottom. And then all the futures are listed there with their actual tickers and their names. So as people are saying in the Zoom call, yeah, UVXY to bear zone reject. So what we're looking for is UVXY is like trading higher and higher and higher. When we hit that MHP, this is the issue. 24 MHP on VIX. If it breaks from there, that is really bad, and this can happen. This is VIX break. MHP break. Okay. If my theories are correct, market doesn't want to sell off. Okay. Remember, I told you guys all about this. This market does not want to sell off. It doesn't. It can. It doesn't want to. Just be cautious, okay? From here, very, very cautious. If we break that level, it can create additional velocity. This wouldn't just be what we're seeing, the start of things. It can create additional velocity. You want to be very careful on days like this. Right? It can create additional velocity. Look at this. Look. See what I'm telling you? See what I'm telling you? Guys, come on. You'll see what I'm telling you? Like I draw it. I draw it right there. Now, remember, this is a warning sign from the market to sell off. Let it. Let it go. We'll call it a day. We'll just do our own thing today. Let it do its thing. VIX is walking right up to 24. Let it do its thing. So it doesn't look like this is going to hold. So let's delete that. As soon as we get here, I'm back to the game. But this is not good. This is not good. And remember how I was just saying the market's just like lollygagging around. It wasn't going to slowly sell off. It's going to be a volatility thing. Be careful. We just hit MHP right here. So VIX has its one resistance, okay? Watch this. If there is a long spot or a reversal spot, it is from here and nowhere else. This is the thing that can reverse or dry up the market from here. I don't bet on that from here. Safe bet is the return to there. Inside of here, we know that bear zone is resistance. So there's that volatility reversal, as we mentioned earlier, that I drew at 24 at 24. There it is. It's like we know. It's like we know what we're doing, right? Come on, champs. You guys know this? So how's the Apex challenge going? I still have Apex going. On the stream though, I don't since we have a partnership with Elite Trader Funding now, we kind of don't, unfortunately, can't further follow up with stream related, you know, Apex stuff as much as I want to. In Zoom call, like, you know, off the record, I'll talk more about it. We are officially, as you see at the top of the screen, Elite Trader Funding. So, like, we're official with that crew. So I'm using their services now. Guys, do y'all understand how today we had an event coming up? If anybody did buy bull zone bottom, get squeezed out, that's okay. It happens. Come back tomorrow, right? Look for a better setup tomorrow. If today is, trust me, if today's the one-day sell-off, be excited about it, because tomorrow and the next day is not the one-day sell-off, or the two-day sell-off or three-day sell-off. You have this VIX right here. That's the problem. That's not the problem. That's the saving grace to the problem. If volatility does collapse, it's good. If VIX starts to break inside of here, you're gonna have problematic trade. Now, the one thing is that would be kind of like one of the most rarest of things to happen. So rare things we get out of the way, right? You have an illiquidity pocket on VIX. VIX wants to collapse from here. VIX wants to completely dry up. This market wants to just spike a rally from here. It wants that more than anything. So right now, the market is just staring in the face of this level right here. Illiquidity pockets crush volatility. They crush it. I mean, they crush it so good. Now, the problem is that it's not the bear zone bottom, it's the bear zone top that creates the pressure. So the problem is that it's not necessarily a guarantee that the bear zone bottom has any result. Like, I know it's drawn this way, like from here to here, it's improperly drawn. The pressure actually goes to there, to there. The bottom of the bull zone, the top of the bear zone. It's a wider V. We're gonna draw a new liquidity map diagram pretty soon to show you all that. So I said if we break that MHP, the market's going to accelerate to the downside, and there is no support down here. Futures has a dynamic hedge pressure in the way, but Bookmap is showing buyers are present there. How does Bookmap even work? Teach me something about Bookmap. What is it? Buyers present bearing. What is it? What is Bookmap aggregating? Why is there no Zoom call? There is a Zoom call, Cliff. There's a Zoom call every morning. Did you not? Oh God, I never hit enter. Okay, yeah, the Zoom call message is the same. My bad. Didn't post it. Yeah, my bad. I had it typed and I didn't hit enter. What was happening was, as I was trying to get my stream started, I was typing like to get the Zoom call, and I was hitting enter, and it wasn't going through Discord. And all of a sudden, my my modem was like flickering. The light was flashing. And I'm like, what's going on with the internet? And then it flashed for a while, and then it turned on, it cycled again, and I'm just like, what's going on with the internet? Internet had a hiccup, and it literally had a hiccup at exactly like 2 minutes before the market was supposed to open. So the life of a streamer, you know what I mean? Happens. Okay, VIX is breaking 24. Be careful here. This can be that big. If this is the big nasty sell-off day, let it. Let it. Don't even try to think about it. Let it. Right now is the time to kind of sit back on this and not. UVXY is now breaking into uncharted waters in the bad side. So any long positions, I don't have any right now. I'm completely flat. Flat, flat. Flat, flat, flat. So I had typed in the cut and paste of like my Zoom channel, and it wouldn't go through on Discord, so it was just literally sitting there in the chat. I wonder if AT&T was just down. Morning. Sometimes you're. Oh, here's another thing to take note of. Yeah. You guys are right. So remember our golden month we talked about? Triple B, right? We're excited about this month potentially having all that lovely jazz where the market was going to stabilize, right? We need to have VIX stay below this level as well. We have two different mechanics on the VIX to keep it stable. We want VIX to test and hold this. If the market's bullish for the month and we're taking the bet that it's bullish for the month, we need this VIX to hold right there. How we feeling? You feeling bullish on the VIX? Bearish on the VIX. Let me get my dynamic stuff here as well. Buy dynamic monthly 54, 57, 54. Okay, so that is one part. Oops, let me draw it in the right place. Let me clean up the drawings here really quick. Let me show you guys something. Yesterday, what class do we have? We had Impact Red Line class. Yesterday. Make this nice and big here. We want the beautiful month. We always want the beautiful month. We always bet on the beautiful month. We always want to see it. MHP SPY 54. I don't bet on the market ever falling apart when all the four things line up. I try to bet on the beautiful month. I want to see it. I want to see the month hold up. Okay, let me get this here. hate how Thinkorswim runs on like 0 horsepower whenever you are whenever you have any other program running. Thinkorswim has always been the slowest piece of machinery I've ever operated in my life. Okay, so we have hedge pressure here, 40, 57, 54. MHP is like right at the same spot too. Just kind of 59 and 69. So we have this level here and this level here. So we do have a lot of support right here, but this is like the brink of the market falling apart. So you have to be careful. This level right here that I'm marking, this level. Where's my orange color? My color palette is gone. There we go. That's it. So we do have some support in this area on the future side, but like I said, that VIX is starting to move. This is likely possible. More downside from here. This is bad for the longer haul. Like we said, we talked about on our calls, is like this could possibly be like that month where every month is great. Or every day in the month is great. Be careful because of here. Pivots can overshoot. Market dynamics get a little wonky. So this is the bad news part. Volatility is going to cycle pretty hard. IWM at MHP right now. VIX on that 25 break, you're going to start to see some movement on this market today. This kind of patterning is very weird. This is the volatility being tested. Normally you don't see markets like do this without recovering. Like you don't see it chop around with that much wicking. It's volatility. So a lot of times you will see this recover. It's just like not really tradable from here. I hate trying to do anything from here. So, you know. There's the test that we want to see on the S&P. This is the test. Key testing level right here. MHP. This is your future support right there. That exactly where I drew. There's your red line and there's your futures MHP. So we might see the market a little forgiving here. Like I said. Kind of the level I want to see it play at. VIX is being a bad boy today. The greater market, we require volatility to be decay. Okay. We require this. So like that good month that I was shouting about, oh, this could be the best month, best month, best month. You must be below here. Otherwise, there's no good month. As Garrett has said, the VIX falls apart here. Ladies and gentlemen, it completely falls apart from here. If it gets crazy. Must for good month. For the good month. This is the test. Remember, there's always a test for good month. We have this is really strong support. This is strong support. This is where the market fights back. This is the strong support. Strong. Market fights back with its own dynamics. Futures right now are balanced right here. You have impact red line not touching, which is the event from like 2 days ago that pushed the market up. Well, there's a little bit lack of trust, I think, on today's consumer confidence number. It looks like people were selling ahead of time. Clearly, the dynamics breaking structure on bad news just shows that data was leaked, right? Or that data was traded on. There is strong support here on the market. So this is where the market gets an attempt to fight back. 57.54 is a really strong area of support. That's why there's wick action here, here, and here. These are your dynamic hedge pressure. So this is where you're going to see monthly. If we use monthly, the market's going to completely die. The increased volatility means the market's going to chop faster and move faster. There's really strong support from here. The problem is with the lack of liquidity, the market can just jump right through it. And this is the one chance for the market to fight back right here. That's it. And you will start to see the market fighting back here. I'll show you how much I know my shit. There will be a fight right here, a very strong fight right here. Doesn't mean the market's going to win, but it's going to be strong. This is where volatility and market dynamics collide. The positioning of the S&P has a strong support here. That doesn't mean it's going to hold. The increased volatility means the increased lack of buyers. This is the 5-day moving average. This is dynamic monthly hedge pressure and impact red line right here. If this market wants to stay bullish for like at least the rest of this week or the rest of the rest of the month, we must drop below here on VIX. Volatility must collapse. And the S&P needs to hold its monthly hedge pressure in futures. We just got faked out and this market is going to sell off. We just got faked out after Friday. Then we'll know it today. We'll know if this is a Fugazi rally. Very strong support. This is where the market fights back. Okay. Doesn't mean it doesn't mean that the market wins. This is where the fight is. It will try its hardest to fight back here. 19,847. The problem is that I don't have faith that it's going to win. The VIX doesn't come back down. Nasdaq has Nasdaq's area of importance is way down here. That's a problem. And I say strong, I'm going to tell you, I mean strong. I mean like strong, as in the market's going to do everything it can not to sell off from right here. Literally from right here. MHP breaks are the rarest of the rare. When I say the word strong, I mean fucking strong. I mean fucking strong. Look at this. Nobody knows their shit more than we do. Strong. It's going to fight right here. Literally at 57.54. Some change. Ladies and gentlemen, I present to you Exhibit A. Strong. Strong like ox. Here's the test. The market will shit on itself if this continues to go. The strength of this is not enough to rescue the market. This must be below here. And if this survives this test, then we're back to golden month trading. And then we'll be golden for the rest of the month. This consumer confidence number, pretty bad, right? You don't, guys, Ian, everybody in Zoom, everyone in Zoom, what do we say about MHP, right? What is MHP? Is always a reversal. It doesn't mean it reverses and goes. There's always so much pressure at MHP. Always. in the reversal case. The gamma on the monthly side is so strong. Now, again, I'm not betting from here the market will reverse from here. I'm actually pretty scared of the market with the setup we had today. But as you see, this is from our Discord. I'll put the word strong right here for a reason. We always talk about IRLs as exit targets. We always talked about this. So the short side exit target, because they can reverse a lot of the time. But we know that your MHP is really strong support. The bull event that raised the market up. Obviously, clearly, we're not clearing out this just yet. Strong push. So remember we had that class on Redline yesterday? If the market's trying to propagate a continual bull move, you're not going to clear out that red line either. It's going to continue to hold. That buy imbalance and sell imbalance will still be there. So the buy imbalance will still be there. And we're really testing the greater market. Is it support? Today is the test. Is the greater market there? To me, this was a bear squeeze. 100%. In chat, everyone's like, damn, amazing call, amazing call. Baby, look, listen, champs. I got to tell you something. You guys are fucking trading champions. Not every day is going to be a winner. Fuck it, right? But you have to understand, today is the one nasty day. That support's going to hang in there. Going to try its hardest. We get VIX below 18.3. We're golden for the month again. Today's the losing day. Today was a lost day. Let it be. Walk away. Strong with 2 underlines. Strong. MHP, always a reversal point. Doesn't mean I bet that the market completely turns around, but MHP is a strong reversal. It didn't scare me in nothing. Now, I'm not touching this market from here until I get levels I want. Somebody says, yeah, I'm the GOAT. Listen. Numbers. It's all numbers to me. I read it like it is. Strong, baby. Strong. Now again, it's beyond the richness of my blood to trade it. It's not where I want to be playing. But since we all agree that these are the levels we care about, I'm gonna go back to the regular chart. You can watch the dynamics of where it is. Oops, that's the wrong. That's the VIX. And baby, listen, baby. Strong. 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 Liquidity maps are always go, baby. This is like what I'm telling you. I'm saying baby a lot today. I'm in a cheerful mood. I gotta say that this is yeah, no, this is how you do it. Now again, this is the scalp, right? So that's the scalp. Now again, this isn't the place to jump in long at. This is the test. Now's the VIX test. This is part 2. This is the problem, the VIX test, okay? This is the problem. You got this in the way. If you got lucky with this, this is your exit target. Now I'm telling you what to do with your trade. If you got this, it's not in the clear. Okay. The better market for the bigger and better. Now again, I wouldn't expect the VIX not to try to attempt this, but if this happens again, they're all, and funny thing is they're all kind of like at the same place. One of the 4 major points of consideration for what we call greater bull market is triple B, 18.3. Which is lining up like exactly where we are right now. So let me just draw this with a white line so we know this. White dashed is that triple B is right here. Okay. This is one of the 4 major criteria, which I'll talk about this right now. You will have your great, awesome bull market that has every single selling day will be bought up if VIX gets below this level, and 4 other things. Number 1, VIX futures has to be less than the contango midpoint. We give it a shorthand, BBB, between the previous month and the current month. Number 2, you need the index ETF like SPY is the main one we care about greater than MHP. Number 3, the ratio greater than half. This is all the stocks. So this is the volatility of the market. This is the index monthly hedging. This is the sum of the stocks. Are they bullish or bearish? Number 4, monthly maps. This is projecting SPY into the future. Monthly map. You know how good our shit is? Watch this. This, my friends, is a bear trap. We're below triple B. Should I take the bet that we hold MHP on Russell? Achieving bear zone second time? Should I? Dare I? Now remember, we're not in the clear yet. Want to hit it with 1, maybe 2. I'm gonna take a bet. I'm gonna take a bet on the market. Now again, we need to clear. I'm a little early, but this needs to clear. This might test and go, so this might drop before it does anything. So this is the problem. I might have entered at a weird spot, but it's enough that I can afford. Actually, let me. Can I afford that drawn out on that? This is the bet. Do we hold? Let me reset something on my computer here. Second. Give me a second. Hold on, Mike. NVIDIA had a 10-minute reversal doji. Oh, nice. Nice. Sorry, I had to re-log into my stuff. I'm taking a long here. Moderate, medium position M. So I'm hitting it medium small. Back to long. Sorry, I had to. You guys know me, I'm betting on the greater market. Oh wait, where did my, oh shoot, my Zoom, oh darn. Okay, back to what we're doing. Number 1, VIX, less than triple B. Okay, we need this to happen. Now this is the VIX test. This is the place where the market can fall apart, but just get ready for it. Number 2, SPY, greater than monthly hedge pressure, okay? Number 3, PD, greater than half. The greater market. When all these things line up, it's very rare this will get bought up. The market does not want to collapse out. Now again, this right here is the problem area. Caution. VIX is okay. Okay. Caution here. Okay there. Number 4, monthly map. When all 4 of these things line up, market's going to be good. All right, everybody here, if you are old lifetime on the old Rocket Scooter site, mean that you had that yearly charge that was 0, send me a DM with your name, account, or your account ID. I'm going to get you on the new site today-ish. Hey, I'm old lifetime on the old Rocket Scooter site, the Legacy site. If you're lifetime on Legacy and you're the yearly recurring charge, not just free, but it charges you 0, you may not know if you are or not. You're like, I don't know. Send me a message anyways. We don't bet on market collapsing when all the signs are there. When all the signs line up, do not bet against the market. Josh says made $500 on that. Strong support. Liquidity maps are always fire. Matt, you're the GOAT. You guys are too sweet. Too sweet. Trading equities together. IWM, SPY, QQ, and adding when hit support have been your go-to for a while. IWM, MHP support, add, and we took back off. Thanks, Matt. Don't thanks, Matt. Thanks, you. Thanks, Abe. There's my trade. There it is. This is that strong support video. Oh, with the caution. Woo! 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 Oh, man. How do I tell my parts all funkadoodle today? Hold on, wait. Hold on. I don't look my best. You know, I must always look my best. I'm due for a haircut. Doesn't mean we're recovering, but resilience is back to positive, which is great. Caution, okay, here up on VIX. Can't complain. Can't complain now. However, market's it's still gonna fight. Where was that one at? Here it is. It's still gonna have a fight. Right here in the middle. Liquidity pocket. There's always a fight. Okay. This is bear zone on Nasdaq. Okay, ready? I'm gonna teach you the greater market in 1 minute or less. I want somebody to set a stopwatch. I want you to say go. Hold on. I'm gonna try to get this in a story. Oh, let me tell my guy, my video guy. Exactly 10 a.m. Okay. We're gonna set a stopwatch here. I'm going to warm up for this one. All right. Greater market. Greater market being bullish, okay? Okay. Let's remove this this, and we'll put the Thinkorswim version. I'm gonna do a lightning round on this. You guys ready? I'm gonna explain to you the greater market. Hot minute. I'm gonna teach you how you can tell those amazing bull markets when everyone's scared of the market today. We're not yet. Okay. All right. Ready? Set and go. Greater market are 4 conditions that you must know to know if this is the kind of market where every dip gets bought and the market just trickles up super slowly but just does not sell off and has a hard time selling off. There are 4 conditions. You must know them. Number 1, VIX futures must be below what's called the contango midpoint. It's the halfway point between 2 contracts that roll over. I'll teach you that when you come to the Zoom calls and our YouTube channel. It'll be everything you need to know about VIX. VIX below here, the month is good. Number 2, SPY is above its monthly hedge pressure. This is the gamma balance. Positive gamma above MHP, negative gamma below. Maximum gamma on monthly options, dealer to dealer trades. As long as you're above that, you're positive. On the hedging side, market goes up. Number 3, DD ratio, which is the net market cap sum of all stocks in the S&P. As long as you're greater than half, they're all in a bull zone. Bull zones get positive hedging to the upside. Number 4, monthly maps. This is projecting SPY into the future 3 months, and it's going to show you exactly what the SPY wants to do over the 3 months. If the bull zone bottom is sloping down like that and the bear zone top is sloping down like that, the market is very strongly bullish over the course of time. So not only do you have volatility, VIX forward curve flattening out in VIX futures. Number 1, that's great for a bull market. Number 2, SPY has positive gamma hedging to the upside on the monthly scale. That goes for the next 4 weeks from today. DD greater than half, all the stocks are bull zones, so the market's having a very hard time selling off. And number 4, into the future, everyone's positioned bullish. So as long as all 4 of these things line up, you're going to get the kind of market that does this. It just does not sell off easily, and it just slowly picks up and speeds up towards the end of the month. That's the 4th Friday of every month. You're not going to have big blowout days because VIX is in decay. You're not going to have big sell-off days that propagate and continue to go because VIX is in decay. But the thing is, and when volatility is going down, liquidity is going up. And liquidity means just market has buyers and sellers. Even if everybody wants to sell, there's enough buyers to keep it from selling off. It's a market that moves like this, and then towards the end of the month, it does that. Okay. When the greater market is bullish, it's one of those things where you wake up every day and say, every dip, can I buy this? All the news is good right now around the board. CPI was good. PPI is good. PMI was okay. Today, the CB consumer confidence numbers came out, but who cares? Everything else is good. The Fed has cut 50 basis points to the rate last meeting, and then they're going to do it again before the end of the year, which is only 3 months away. So where we are right now is that economic data looks good. The jobs market's still kind of not like booming, but it's still okay. It's not terrible. But the market's going to fight and have a very hard time selling off. It's not going to be easy for this market to sell off at all. It's liquid enough. Number 1 right here tells you everything you need to know about the liquidity of the market. If VIX is priced in, forward contracts with contango, meaning that the forward contracts are priced in slightly higher than the current month, then VIX is in a state, or futures are in a state called contango. When VIX is in contango, that's healthy for a bull market. And so the difference between 2 contracts, the middle, if VIX is decaying below that middle, then that means we overpriced that volatility. The market is surprisingly more liquid this month than expected. And when you're liquid at all-time highs and a breakout of all-time highs, the market starts moving higher. This is where all your technical analysts out there get their asses handed to them because they're like, oh, the market's a double top. It's going to sell off because A, B, and C. And this is where you, me, and everyone else looks at it and goes, the market broke the double top, is going to continue to go. if these four conditions hold. If these four conditions hold, which this was the scare today, we are good not only for today, we're good for the month. The month. This stays below here. We've got 3 more weeks of trading like today where the market has no catalyst to take it down, enough liquidity to fight off a selling day. You'll see this? Pop quiz, friends. Where'd my chat go? Fudge. Hold up. Question 1. Question 1. Did anybody here, the Rocket Scooter crew, anybody here short this market today? Like I said, you guys, I'm not giving you trading advice. Here on YouTube, this is free. Free chit chat is all this is. But did anybody here short the market today? Or is anybody here shorting the market right now? Everyone in chat, everyone in Zoom. Anyone short today? I'm not telling y'all what to do. Ever. You guys are making your own decisions, trading all your stuff every day. It's different. I don't know if you can see on YouTube. I'm asking people, did you short? No, nah, no way. No short market. No. Everyone's saying no. When the market started falling, did you do anything at all? Or did you sit out and watch? A lot of you probably took a long and got squeezed out and then said whatever. Right? So yeah, people are like, somebody tried to take a long and got stopped and waited. No shorts today. Okay. There were some short setups in here, but in the greater market, it's just not that bearish, right? What's going on with my futures here? I was having issues connecting to my futures account for some reason. I think I typed in my password wrong or something. Oh well. All right. DD ratio greater than half warrants a bull zone test. Now, problem is that this is anything above here. It's bear. It's BLD. BLD in here. This is MR with hedge pressure resistance. So, like, the problem is that Nasdaq is not going to have an easy time flying back through the roof. This is actually pretty strong resistance right there. Really strong. BLD on liquidity map, which is right to the top side here. BLD is always bullish at blue to yellow. BLD is a very strong bull setup. So blue to yellow. So while there is, okay. So this is strong resistance, right? Strong resistance here, but if resilience holds itself above 0 and we break through here, this is a fast move. I'll put the word fast here. If we break, the little 3 lines just means if we break, it's a fast move there. It's a quick 10-point run on Qs if it breaks. Guys, don't forget to sign up for the Zoom calls. The Zoom calls is where we went over this greater market thing. It's so important to understand that this is the month you wait for. We teach everybody this is the month you wait for. And today was the test. Is this the month? And the answer is yes. Today's action tells me that this is the month we waited for. This is the month, boys and girls. At Vixen Decay, oh, I got no fear of this market. Right here, if you remember from your class yesterday, is starting a brand new impact red line for the rest of the week. With the lack of volatility, people looking at this right now, you may think, okay, there's going to be a bunch of red candles coming up. There's no volatility anymore. VIX is absolutely in decay. Now, again, it can start to grow again. But that volatility excursion is now in decay. It seems all right there. Market's just going to be back to its slow crawl up. If this is the day today, then this is the month. This is what I call buy the dip month. This is like November of 2023 was the last time we had a month like this. You guys want, who here, do me a favor. All right, I promise you guys this. You join the Zoom call. Everyone in Zoom right now is on fire to trade. It is a whole new ball game. We are teaching all new lessons. There is a whole new way to use our tools, a brand new way. Brand new way. Everything that you've done with Rocket Scooter the last 2 years is being thrown out. We don't do that anymore. It's a whole new method. We have stronger probabilities of certain things, and you have to learn them. You will only get a head start. You'll get like a 1-year head start before all the courses and everything are solidified by being in the Zoom call. That's it. It's the only head start you're going to get. You have to take the Zoom call. $20. And if you don't like it, I told you after 3 days, we'll give you your $20 back. You have to support the Zoom call. There's all new diagrams. This is all thrown out. Throw this out. It's been modified with probabilities and position sizing. Or certain legs we don't even touch anymore. We have years of back tests now that have supported the strongest of the positions, and all we do now is focus on the strongest of the pieces now. So do me a favor, you guys. Y'all liked what you saw today? The 20 days profitability mindset, which is a thought experiment in market statistics and dynamics. This thing right here, take it. $20. And if you don't like it, after 3 days, we'll give it to you back. There's nothing to lose. There, we have had an intense amount of information come out, and every single lesson has been new. We're redoing all the courses. Every course has probabilities. Every course has position sizing. Every single diagram in the cheat sheets, from DD to redline to everything, have positions on them: small, medium, large. Do I buy small and hedge pressure? Do I short heavy and monthly hedge pressure? That, it was the missing piece, because we needed years of data to support the strongest of the strong. And I'm going to tell you guys something. When I put the word strong on that MHP, watch this. Everybody in Zoom, let me prove to you how how on point it is. What do you do at MHP, everybody? From either direction. What do you do at MHP? Pop quiz. The Zoom call is training people. We are training people to think and to think quickly. What do we do at MHP? Every single time. I don't care which direction you hit it from. Every single time. No matter what, you hit it from the top, you hit it from the bottom, MHP. I'm not even saying the word. The Zoom call folks are in it. They said reversal, 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 reversal. Don't bet on the break. Reversal, reversal, reversal. Everybody's on point. MHP is always a reversal. You didn't know that. You're old school Rocket Scooter folks. You didn't know that. We have enough. It's not always a reversal. What I mean is always, the bet is always a reversal. Never bet on a break. Never bet on an MHP break. So, as Garrett EC in a YouTube chat has helped us with some of the back tests, all the numbers are finally in where there are certain positions they're just better than normal. You need to go, if you just signed up for the 20 days, you need to go watch the videos from the start. We produce it's called 20 days profitability, which is basically saying that mathematically, this is mathematic. We actually prove this in these lectures, that all you have to do is randomly long the market. We call it the blind monkey experiment. Okay. A blind monkey with a handful of darts that just long the market. And there's a dartboard of stocks, right? All the blind monkey has to do is throw a dart. Whatever stock it hits, he has to buy. The only handle he has, but despite the randomness, is the size of the position he took. And if he does his math correctly, such that he's calculated that if he loses a certain amount each day, his stop loss, over 20 days, as long as half of his account still remains, then over time, going to infinity, will make money as a trader. That's all it takes. That is the absolute best worst case scenario. As long as you have half of your account still remaining, at minimum, it probably could go lower, but half is a good point where it doesn't take forever. You start with 100,000 and you have $50,000 left by the end of a month, which is 20 trading days. And you just randomly long stocks at any point in time. And this worked in 2008. This worked in 2020. This worked in 2001. We did the test in every single period of bear market crash. It works. Randomly, and again, don't trade like this. It's a thought experiment. I always say, like, in engineering, we have something called the Carnot heat engine. It's a thought experiment that says if you have a fully perfectly designed heat engine where there's no work or heat escape to the surroundings, everything is converted 100% mechanical conversion from energy to work. Never happens in a real system, right? There's friction and stuff that always loses heat to the surroundings. But long story short, it uses a mathematical case for perfection. To design your maximum, so it's the best you could ever do physically or mathematically. So the physical can never exceed the hypothetical. So a hypothetical best case scenario is that you can randomly long any stock at any point in time, at any point in the day, and as long as you lost a certain fixed amount, which you tell you in this webinar series, and you survive 20 days of doing that, even losing 20 days in a row, and you have half your account at the end of the month, you will still make money as a trader. It's ridiculous how everybody loses money trading when everyone's 401k goes up, because that's exactly what they do. They don't stop buying the market, even when it's crashing. Your 401k, when it crashes, they buy. When it crashes, they buy. When it crashes, they're always buying. Every day, every month. It's funny how we do all this extra work to lose, right? So what you will learn in this webinar is why that phenomenon is. It's the probability of what the market is doing. And what's neat about it is I'll even show you in here. It doesn't mean you go in there and randomly long the market. It's, again, it's our version of the Carnot heat engine, which is the perfect example. It's the perfect example to show that we do stupid stuff to go out of our way to lose. You literally have to go out of your way to lose money. Why not just be the dumb? Not dumb. He's not dumb. Blind Monkey's really smart because he realizes what he's doing is smart. So he's not dumb. You're dumb. We're dumb. He's pretty smart. Let me show you something on the commitment of traders. So he realizes that mathematics and probabilities are on his side. You know what? They've changed the bar chart. How did I get it to show? Yes, continuous. Oh, let me go ahead and liquidate. We're back at bull zone test. Let me liquidate. I'll take the bull zone break. That was great. Put that in my pocket. So we're now at the bull zone test. QQQ. This is where the test is. Now again, resilience is fighting to stay positive, which could break higher. But hey, let's call it a day. There to there. That was a setup. Markets crashing today. Everyone's all scared. No. Call it. Done. Okay. No over trading today. All right, back to this. Let me show you something cool. I don't know how I did this before. But they have like contracts here, and it won't let me type the symbol. Bar chart. I want the entirety of the data here. I'm gonna tell you guys the Zoom call. I'm trying to prove to you that they buy the dip when markets are crashing, but it's like it's only showing the Z24 contract. So I don't know. Let me go to the non-interactive version of this. Legacy report. No, that's not it either. It's weird because I want to see the continuous, not the Z24. I want to see all the data. Whatever. We'll just use our imagination. Oh, well. Yeah, I don't know how to select all S&P, like S&P over time. It's only showing the Z24. How do I change the contract? I'll tell you something. Our chart. I love you guys. Come on, 1 year. How do I change contract? Oh, let's get the interactive chart. Regular one. All right, there we go. I love peeps of bar chart. Bar chart's some chill folks. All right. Interactive chart. Oh, that's futures quotes. Okay, we don't want to do that. Go back. There's no... Where's that one? Okay, I quit. I'm going to have to send them a message. Me and the bar chart peeps are tight. We talk a lot. I'm going to tell them, you need to let me change the contract. It doesn't give me anywhere to type it. That's the problem. Like I click on it, I click on symbol and it doesn't let you input a symbol. The field doesn't let you interact with it. I was very bummed. Okay. At the URL. Yeah, that'd be probably something. Liquid markets don't crash, as David said. I shout that all the time. Okay. So my long from here to here, I've closed out completely. I'm not going to bet on the bull recovery of the day, but this was a pretty strong thing. Any break a bull zone is a go. So markets are crazy like this. Let them be crazy like this. We'll have the volatility test come up. All right. So this is the thing that I'm going to tell you is, and the 20 days thing, it's just mathematics. Like you cannot argue with the math. It says that as long as you have half your account over time, you're going to go in that cost basis averaging in on long positions is what your 401k does. As the market's crashing, what I'm going to show you in the commitment of traders is that the longs are increasing. Markets dive really hard. There's people buying. Markets dive, people buying. Markets dive, people buying. Now the markets start selling when people start dumping, but you always start to see as markets are falling, the long is picking up and picking up and picking up. People know that over time, the stock market always goes up. Fun fact, all companies, all stocks eventually go to zero, but the stock market always goes up. The top 500 companies always go up. The net sum of that always goes up. And the reason for that, if you didn't know, was population growth. There's always more humans, so there's always more buyers. There's always more buyers and sellers anyways on the non-dealer side. As time goes by, you get skewed to having even more buyers and sellers and more buyers and sellers and more buyers and sellers. That way, the trading 10, 20, 50, 100 times over earnings keeps getting bigger and bigger and bigger as time goes by. Because there's more people investing in the stock market as time goes by. Supply and demand is some really interesting math, right? So because the market always goes up, and when I say all stocks go to zero, it's kind of a fun fact, is that all companies that have ever been, for the most part, they all become worthless over time. How many companies in the top 500 right now have been around since 1840? They're all dead by now. There's always 500 new companies to replace the current 500 companies. every 50 to 100 years. Okay. So all companies that have existed pretty much are gone. So, but the stock market always goes up. So let's think about this. Why is the 20 days thing important? Because we proved statistically, even the worst markets, there's some really interesting stats about buying and when you buy, that as long as you just have half your account left by the end of the month, even most bearish months, you will make back a huge majority of your loss, because there's very rare that you get a month where the market sells and stays red. Sells and stays like red with a red body candle. Most months that sell have a really strong wick. There's a percentage of these, and when you do the math, the idea is as long as you have half your account left, even the worst case months where you have 2 or 3 months where it sells off, you might be very diminished. But the recovery from that, you'll make money. COVID was a great example of that. Even in 2008, markets didn't just fall straight down. The markets actually did this for a year and traded lower for a year. But if you count the number of days as the market sold off, there was more green candles on the daily chart than red candles. It was phenomenal. And the biggest financial crisis we ever had in our lifetime. And it was only around like September when that market actually crashed, which was like 8 straight days of bam, 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 and it fell. And that's the rare part of the year-long bear market. And in 2022, we had a year-long bear market as well that really didn't have a crash to go with it. But it's like, even in 2008, had you randomly longed the market, even as it's going down, you would actually have made money as it was going down. We proved that too. Randomly buying the market as it was falling. Maintaining the position size. So as your account gets smaller, your position size gets smaller. That's the one thing you have to take into account. So your account gets smaller, your position size is smaller. And we teach you the equation to do that. The loss you take per trade to target not losing more than half your account at the end of the month. That's all it takes. And if you were to buy randomly every day in 2008 as the market was selling off like this in that entire year, even the market falling like this, you'd have still had plenty of money and survived the crash. And then as you're continuing to buy, you have built yourself wealth and bought the market at the dip. As the market goes back up, you made a fortune by now. So what it proves, and this is the whole reason I'm telling you this, what the blind monkey game proves is that the reason you lose and go out of your way, Garrett Otto, when you say Aaron Burr, it reminds me of that milk commercial. Do you remember that one from the 90s? When you said it like that, that makes me think of that commercial. Where he's eating like peanut butter. And he's trying to answer the question. I don't know if you remember that. Those old Got Milk commercials. Anyways. The thing that's very important to know is that randomly buying the 2008 crash, throttling your position size, you would have still made money over time and survived. You would have survived the worst crash we ever had. Okay. This is why. Why you lose money as a trader. Hold on, let me put the timestamp here. There's some good nuggets of info. Why you lose money as a trader is not because you're guessing the market wrong. Okay. Why you lose money as a trader is not because you picked the wrong direction of the market. I'm telling you the direction. The direction's up. Don't ever pick anything else. It's up. Always up. At any time. Even the worst times, it's up. Your brain should be thinking up. Your brain should be thinking, well, after some time, it's going to continue to go up. Okay, so if I'm continuing to bet that when that is, no one can predict the stock market. No one can. We can't. No one can. The stock market is random. Famous trader, best trader ever lived. Jim Simons stated that the stock market is nothing but Brownian motion. Then how did he make so much money as a trader? Brownian motion means random motion. The ups and downs and buying and selling is 100% random. The greatest trader alive said that. And I'm saying that. I agree. I proved it mathematically. It's random. So how do you lose money as a trader? Not because you picked the wrong direction, because nobody can pick the right direction. If somebody could, they would be infinitely wealthy. They would have raked in all the money that the stock market has to provide. They would have won every trade. If you could predict the market, you would win every trade, and everyone would be a loser, and you'd be the only winner. You can't predict the market, so how do people make money? You actually, and we've proven the 20 days thing, which you will learn, you go out of your way to lose money because of your bad position sizing. Why you lose money is not because you picked the wrong direction or picked the wrong trade or chased the wrong thing. The market's random. The random monkey throwing the dartboard can randomly make money. So how are you losing money? Your position sizing is bad. You are taking too much risk despite the odds that you have in front of you. There's a probability that during 2008, you bought, there was more green days than red days as that market crashed over that year. You can go count them. But you can make money even doing that, buying that dip the whole way down, as long as you make sure that your position size is correct and your risk that you take is correct for the account size that you have. As your confidence goes down, your position size goes down. The amount that you allow yourself to lose per trade and per month is fixed. Per month, don't lose more than half an account. And that's the worst case month. That's like crash month, okay? If you're losing more than half of your account in the course of a month, your positions are too big for the risk. Your risk is too big. There's a certain amount you need to lose per trade relative to your account size as well. We teach you all of this. The reason you actually lose money, everyone here, the reason you lose money is because you are positioning incorrectly. Your size is wrong. Where you get in, picking the reversal or picking the dip or picking the support will dictate the direction you want to go. Sure, we can predict volume here, but I still can't predict direction. I had a high probability that we would bounce exactly right here, but I couldn't predict that that would actually happen. I have confidence it would happen. The confidence I had that that would happen, roughly 70%, and those are stats we teach you as well. Under these conditions, under most normal conditions, that bounce would have a 90% accuracy. 90%. This bounce, under normal conditions, we had caution conditions. So when I know I go from 90 to 70, I bet smaller. I only grabbed 3 contracts instead of like 5 or 10, something bigger, right? So the idea is that the reason you actually lose money as a trader is because you're betting too big. That's it. You're betting too big. You're trading on margin, you're over leveraging, and you're betting too big. You're betting too big that you can't survive days like this, right? Big nasty crash day like this blows up your account. So this 20 days course is all about teaching you how to bet. As a matter of fact, on here, each one of these legs, I'm going to put an X. There's a number or a letter next to each one of these in the new liquidity map. It tells me, how do I trade? Normal, medium, or small? Do I trade small here, normal here, medium here? And we define what normal, medium, and small is relative to your account, such that over the 20 days, worst case scenario, you lose 20 days in a row. You still end up with half your account. And we give you a spreadsheet that shows you this math, by the way. This is now, again, you're never going to lose half of an account if you position correctly. The only reason you lose that much is because you don't position correctly. So you position correctly to make sure that your worst month. I lost every single day randomly trading the market, buying along whenever I randomly picked it. And I lost all 20 days. There's still half my account left. You can still actually make money doing that with no technique, which is the funniest part. We just went through and counted the candles. I picked random spots. I'm going to long from here. Okay, I hit my loss. That's okay. Let me long from here. Hit my loss. Okay. And as you're losing money, your position size gets smaller and smaller and smaller. As you're making money, your position size gets bigger, bigger, bigger. And randomly longing the market at any point in time, once a day, with one stop loss, with a correct position size, randomly buying anything at any point in time. As long as you have half your account left at the end of the month, you will make money over time. A lot of money over time. It's ridiculous. And that's what I say. It's the perfect case study to show you why you lose money as a trader, is because your positions are too big. Okay? That's the whole point of this 20 days thing. When people are going up telling you it's worth every penny, you've been with us for years now, but this is what it refined your edge. It's because it's a position sizing course. Every single piece of the liquidity map is redone based on small, medium, or large. When I ask people, what do we do at MHP? Always bet on a reversal. Under normal conditions, that's a 90% chance that was going to bounce. Under caution conditions, roughly about 70% chance. MHP is very strong. And Garrett, you've been doing test studies on MHP as well, and I'm curious some of your data. I'm going to get with you after some of the conditions you have that lower the probability. Like under perfect conditions, MHP is as strong as a bull zone bounce. Under perfect conditions, which is no catalyst and no DD break. These are our new conditions for irrational. We kind of trimmed out irrational again. Under no cat, no DD break, bull zone bounce is in the 90th percentile. And you know what's funny? An entire industry has spawned on your behavior patterns. I'm going to teach you something great as well. Since I'm a huge fan of trader funding programs, I see Joel stepped in here, kind of reminding me to say this. And nothing to it, right? Casinos are designed with the house advantage and edge such that, you know, only the best players can win consistently. And most players will lose. But you have fun doing it. And trader funding is an awesome thing to do as a new trader, because it gets you into the game. It gets you taking a little bit of risk. You can get a reward. You take it seriously, and it's good. But the business model of any company is that you must bring in more money than you give out. And therefore, just like a casino, there's an edge, probabilistic edge kind of thing, where most traders will lose, which makes sure that the traders that win get paid, and then the company has the overhead to pay everyone's bills, right? Which is fine, and that's totally a normal business model for anything. But the reason you lose, especially in trader funding programs, is because their risk model knows that you bet too big and you blow up on drawdown, which is why they all have drawdown limits for the most part. Now, ETF, the company I trade with, has this really cool feature that as soon as you pass a certain level, there's no more drawdown. It's static. There's no more trailing drawdown. And the reason that like Apex and all these other ones do trailing drawdown, because they know that you don't have to bet right. And they know you're going to bet too big, and all it takes is one blowout day for you to undo a month of work, because you never went through Matt's 20-day blind monkey position sizing class. You want to go past trader funding programs, you must know how to position correctly. You're never going to be able to pick the right trading day, pick the right direction every day to make money. It is 100% the size of the position you take against the odds you have, and that's how poker players win. They know the cards they have, they know the cards everyone else has, they know the risks that they're taking. Okay, I have $100,000 and the odds of me winning this hand are probably 30%. I'm not going to go bet 50 grand. I'm not going to go all in. Chances are I'm going to lose this, so I'm going to make sure I don't lose more than 5% of my pot on this loss. Let me go ahead and fold. They're always thinking about how big they're betting based on the risks they have and the numbers and the odds they have. When we give you a course that's all full of odds, there's probabilities of each one of these things that you see happening with odds. There are conditions we look at for these odds to take place. Can I tell you guys something? In the new rule set, hedge pressure breaks are no longer irrational for weeklies. Garrett, I gotta talk to you. MHP break only is the only irrational signal. So even our alerts are changing, and you will not get the information for a long time unless you do the Zoom call. We've completely refined what we consider irrational. DD band break, catalyst, MHP break, and that is it. That is it. That is it. This is no longer irrational. This is a position sizing change. I've eliminated a lot of the legs I don't take from the liquidity map sheet. There's only certain legs I do take. It's all about position sizing. So you guys want to go out there and ace your trader funding programs, you have to know how big you need to trade despite what's given to you. And I'll tell you, you guys will have a tremendously hard time making money as a trader unless you know how to position right. Which means every time you buy the market, you need the odds of your success. What are the odds that trade would have bounced where I bought? 70%. Good. Not the greatest. There's no irrational signal yet. Except for here, UVXY, MHP break, which was that little last pop there, was an irrational signal. Once that undid, we're back at a cautionary state. At caution, I trade medium position, half of my normal size. My normal size in this account is 6. So I traded 3. I bought 3 and made $1,000. Whatever loss I took today at the start, I ended up walking away green. Don't believe me? The 2 accounts I'm trading are now green for the day. I bought and took a heavy loss. I waited and waited and waited and waited, and then I got in here to here, popped them both green. Now I'm green. I did not take a big position here. I took a normal size position here, my normal trade. Once this happened, I got out of the way. You guys saw me frantically get out of the way. I waited, I waited, I waited, I waited, I waited. I longed from there to there. Made it all back and then some. Became green for the day. So do you understand how the art of trading and making money while doing this is all about how your position sizing? You're not going to be able to predict. Who could have predicted that this would happen and that would happen? Nobody did. Woke up today, didn't expect this to happen. But I had 70% odds here. Here to here is 90% chance that we go from here to here under these conditions. 90%. Which normally gives me high confidence to bet normal. But because we were cautioned on VIX, I traded medium half. We teach you guys this in the courses. It's all about how much you bet. And now that I got the trade I wanted, I'm just done. QQQ has very strong resistance. MHP is always a reversal. We never bet that we break. Never bet. Even though it can break, we never take the bet. So the long trade, as I mentioned earlier, there's a really strong leg right here. This is a very powerful leg. There's a caution with Nasdaq resilience being negative that it's gonna have a hard time rallying from there. And with this being resistance already, this is 2 negatives on the bull side of the market. So I sit out. So I close my position. So repeat. Resilience being negative, the market moves from here to here. Okay. I always bet that MHP is a reversal. So because of this, somewhere here there's resistance, okay? And it would be the worst or the smallest probability to break this. So this is the lowest probability. Okay? So the market's likely to move here and maybe stay back. I'd like to bet that it moves here. But the problem is that while this is really strong support, this is really strong resistance, okay? So I close my position right in here on these pops right here. And now that I know there's a low probability of a break, would I jump in on this long here? Even though there's strong support here, it's a very moderately short-term distance. 4 points in the Nasdaq and the 4 points in QQ. Second test of MHP. Our study doesn't look at the number of tests. Our study looks at where you open and where you close. If you open above it, do you close above it? If you open below it, do you close below it? That's it by the end of the day. So the number of bounces throughout the day, it doesn't matter. You reverse it every time with a one strike stop. Do I always short MHP? Always. Always short MHP. Always. If there's reason to. Today, would I short MHP is your question on Qs? If I were to short, where would I short to? You have bull support this way, hedge pressure support this way, bear resist this way to the middle. It is a short scalp. I always short into where that pressure balances. So because it's that small, it's probably not worth taking, Justin. But if I were long, I would close my long at 485 and be done with it for the day. So the idea is, while there is a short scalp here, it doesn't really have a lot of juice to continue to sell. Market opens above in the bull zone. It's back in the bull zone. We're solid. There's no volatility here. So the idea is, because there's a low probability that it does break, I still don't bet against it in a strong bull market. I usually don't short in a strong bull market. I'll usually always reverse MHP from here if there's enough juice on a trade. Resilience is actually negative right now, so it's not a terrible idea to scalp from here to here. As a matter of fact, from here right to there, not the worst idea in the world. But it's too small to really care about. And I took a loss and I got $1,000 over. I'm green. I made my one trade for the day. Justin, what's up, dude? Wait, which Justin are you? You're not Justin Howard. We have like 18 Justins in our group. That's like the most popular name, I think, in our group. Justin and Matt. There's a lot of Matts too. Rue. Oh, what's up, dude? Okay. Cool. All right. So do I always short MHP? Yes, but in a greater bull market, which is what we talked about this morning, you have to be very cautious. It's not shorting for reversal. It's shorting for scalp. And because you have such strong bull support now, you tell yourself there's not really much. There's not much juice on this. Like, I'm not shorting for this to sell off. It's a rarer case to break. I'm actually waiting in this mode. If I can get a scalp in there, cool. Too small, not worth it. Not worth it. But here, if we get the break, I'm ready. I'd be ready to continue along this on the break. Now, let's talk about SPY. Case in point number 2, S&P resilience is negative, so there is resistance in that same spot on SPY, which is weird how it's both lining up. So the problem right now is that the upward momentum is kind of stifled a little bit. So in all honesty, the smarter trade today is to buy 570 with that 1 point stop at 569. If I'm swinging this, is to long right here with a stop right there. Again, I'm still not doing it because I'm 50-50 on this one. That is for the long haul. That's not for a day trade. Like, I would bet that the market's going to hold. So I'm not going to do that. That's what I would rather do. But the problem is, and what you're betting on is that this resilience number goes above 0, the one I'm circling at the bottom. You want the stocks to be fluxing through the box. What resilience does is it predicts if the S&P is going to do that or do that based on what the stocks are doing. Currently, the stocks are not doing good for the bull market today, and that's why it's going to have a hard time rallying through this box. You see it's trying to sell in this box. So now you have a big fight. Resistance from here. It's trying to do this, but the support here is so strong. So because it's so strong and so tight and so fighting, it's kind of like a spring that's loading up. And while there is no volatility to sell off, it's hard to make a decision from this point. I always err to the long side. If the 4 big market signals, the dynamics are pointing up, I always bet on the long case. I never bet on the sell-off case. So the proper bet with that uncertainty is I'm uncertain, so let me trade small. Something tiny. Put 1 contract on, let it go. But today proves, guys, that we have the great month that we want. The month that we've wanted, we've got it. And if I'm betting small here, I'm betting that the stocks catch back up. Now, right now, the stocks aren't giving me a lot of love. Nasdaq resilience and S&P resilience are both negative. So the market is not finding a lot of power to move from the bull zone. Typically, you want that to also be positive for the day. And so we're not there yet. So here's the Nasdaq. Now, why I say MHP is always a reversal bet? Because I have so many conflicting signals, I step out of the way. So anytime I have a short bet that I can take, and I have any kind of conviction that it's not going to take off, I don't even trim it down and bet small. I don't reduce my position on shorts. I just don't do them. My short trade needs to have everything line up for me to take it. So when shorting markets, the one thing with longing, if I have a lot of confidence, I bet bigger. In my less confident position, I'll bet smaller. So I stage down as I'm losing confidence. Like as these rules flag red and I lose confidence, I just bet smaller. But in shorting, if I have any one thing that tells me no, I don't short at all. The thing that tells me no right here is that the market is just too strong support right there. Support here is massively strong, and there's no volatility to go with it. So I'd rather wait for the break and bet on the break, like I said. I'd rather take the long trade from here. So when I got here, the reason I don't reverse is because there's just not enough juice on that trade, and there's enough support, and there's no volatility. The only real mechanism that gives me thought is that the stocks aren't really rallying as fast as the index is rallying. So while this might work to there, the fact that I have this greater than half, it's not going to sell off any further than 484. As a matter of fact, I'd be more willing to long there, more willing to long there with the stop right there for the longer market, just to support and be there by the end of the day. So that's likely what's going to happen, you guys. This is what I think is going to happen. So I don't deem it tradable. I'm just going to sit out. I'm done. Turn my loss into a win. I love when that happens. Don't forget the Zoom calls, you guys. We made it completely affordable. Only $20 a month. And after 3 days, if you don't like it, well, you can ask for a refund for the Zoom call. I'll teach you position sizing like you've never seen it done before. You might think that I have some special magic power to predict the market. I don't. I just have math and cheat sheets in front of me to tell me the odds of all these different plays, and I just bet the right way. And it's funny that the bigger bet I took had a loss, and the smaller bet I took had a bigger win than the loss I took, and I ended up being green for the day. That's really what you're trying to go for. And the only trick you saw me do today was positioning the correct size. I took the high probability trade, and I positioned with the correct size. I didn't do anything more special than that. I love you guys. We'll see y'all. Zoom. 3 o'clock. An hour for market closes. We'll see y'all. The old videos, you can go and watch. They are all recorded. Start at the beginning and watch them in order. After you watch them, go leave a review.